Welcome back to the Floor of the CME Group here in Chicago, April 4th. I'm Killer from Treasury Curve. Treasury Curve is an institutional money market portal. We assist firms with overnight cash management. Well, April is here, and let's get into the zone, the cash money zone. Let's recap last week quickly. Obviously, there's Fed talk everywhere, and I really think that it's kind of a understated element into the market that we need to take notice of. We had 13 different Fed officials speaking in 23 different speeches in the last 2 weeks. We have 2 more today. We have the Chicago Evans, and we have Atlanta's Lockhart talking. And I think all this different talk, we have a lot of people being hawkish, but all this different talk, and obviously we saw Dudley on Friday come in the dovish tone. We know what their stance is. They're either a hawk or they're a dove, but I think this continued chatter out there is the point I'm trying to bring up. Transparency. Is there such thing as too much transparency? That is the issue at hand. I want you to comment here in this video or get me at the Killer on my Twitter account. But how much is too much in the transparency world? And Uncle Ben, kind of like Don Corleone in The Godfather, you got to get your lieutenants in order. Your house is out of order, Ben. Get it in order. You have too much people putting volatility. When Dudley came out and talked the U.S. dollar gain on Friday, some nice grain got crushed. You saw the euro currency rally. We're talking trillions of dollars moving on these guys. And what's the motivation of their speeches? They should meet quarterly. They should have their opinions, and it should be dissenters or non-dissenters. That should be it. But right now, all this chatter out there is really putting some volatility in the market that's not needed. And it's really kind of people making them a little unnerved. So Uncle Ben, get your house in order, bud. Let's drill down these treasuries. Last week it was just a wild ride. You see the vapor, and it goes down in that 30-year and comes up, and it's bouncing in between. We talked about that last week. That channel, that 50-day moving average, that 100-day moving average. Hopefully you got a chance to play it. It was a little scary buying it down there, but boom, we rotated back up today above that 100-day at 120.09, and now we're currently testing the objective I tweeted out this morning of 120.31. And I think this S&P, we saw the S&P make a high of 33.75 on Friday. We came in and tried to test that this morning at 32.75, failed, and they've rotated down to this 26.27 level currently. The weekly pivot's coming in underneath the 13.20.50, and I think that 13.38 is a good resistance band still to use this week. A lot of moving parts this week, folks. The Middle East is still the Middle East. The sovereign debt still the sovereign debt. All those issues are still there, and everyone still currently has their head in the sand on oil. Oil made a new high last week, 108.47, rotated above that today. So is 110, in our sights? I think so. You tell me. But I think in the currency, we're looking for this ECB rate decision, April 7th. Clearly, 25 bips is on the table, but they're talking about 50 bips. That would be a pretty decisive move, 50 bips, in the face of this inflation, because inflation obviously needs to be curbed by rate raising, but at the same time, that oil, if it gets above 110, folks, it's going to take a big dent into our economy recovery that we've been talking about. So from the floor of the CME Group, have a great week trading, and Uncle Ben, you got my advice. I hope you see this video, buddy. Be the hammer, not the nail.
Hey, bring it back, bring it back. Now double your money and make it stack. I'm on to the next one, on to the next one.